Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. In this video, this live stream, unedited and real, I'm going to answer all your questions and I'm going to show you how to always win. It's all about risk management and discipline. This will be the most important video, live stream, I make this year. Very important. You need to watch to the end and you mustn't miss anything. This is essential viewing. Patience. You must know your goal. Be prepared to sell. Manage your risk, discipline, and buy with conviction. Warren Buffett comes to mind. At the moment, we've been in a bear market. We've seen the market sell off and go down and down and down. People using phrases like there's blood on the streets. We've been talking about trade wars, inflation. Maybe the Fed are about to start printing money again. We've had fear. We've had crypto rising, dumping, and then rising. We've had people stressed, turning to crypto as their only solution to make money. Screaming at the board, what is going on? Markets up, markets down. Going to the board and trying to work out what we should do next. The economy is in tatters. Inflation wars everywhere. Trade wars, things not moving around the world, a war between the United States of America and China. Is all that about to come to an end when we do a deal? Well, I'm going to now explain to you how to always win, never lose, on my 24th trade and my 24th win. Manage your risk. These points are essential. You must have patience. You must know your goal. You must be prepared to sell. You must manage your risk, demonstrate discipline, and when it's time to buy like Buffett. Buy with conviction. I'm going to explain all of that in a real case, live video, unedited, unscripted, with my own real money, explaining everything that you need to consider, at least for your own strategy. So without further ado, let's get straight into it. Let me bring the live tickers on so you can see this is happening live. This is the clock, 7 minutes past 9 Central Standard Time. So you know everything I'm saying here is real and live. Please tap the like button. Make sure you watch through to the end because this is the most important live stream I have made all year. I could have made a video. I chose to do it live so I can talk to my members at the end and answer all their questions. If I made a video, it would just be self-serving. This is for your benefit, not mine. Please click subscribe and ring the bell and be part of the Lucasade family. So let's go from the beginning. An investor is a person that buys and owns a business or owns an asset that's going to increase in price over time, providing them financial freedom when they need it. Not today, not tomorrow, when they need it. You can't use the stock market as a cash machine to make money from nothing. Some people try, of course. 95% of day traders, it's why we run it at the bottom of the screen, lose money. However, if you are a long-term investor and you buy businesses, things that can make you money, you'll always have money because if you invest wisely, those businesses are working for you 24 hours a day, 7 days a week. Doesn't matter whether they go up, down, left, right, or sideways. When I buy, I don't buy stock prices. I don't buy stock movement. I don't even buy when a chart tells me to do so. The charts are important. They are very important. However, they're not the go signs for me to buy or sell anything. I am looking at fundamental principles. I am talking to the people that work there. I'm looking at balance sheets, profits, margins, who's buying, who's selling, what makes that business that I want to own unique. And when I buy with conviction. But this is important. Very, very important. The last few weeks, we have seen massive amounts of selling. This selling has been caused by macro conditions, very unique macro conditions. Not macro conditions which I normally speak about, things to do with external of the business like interest rates or wars breaking out or whatever. This is self-inflicted macro conditions caused by Donald Trump coming into power and playing the trade war game. What it's done is it's provided uncertainty for the market. Have the businesses all of a sudden been worth less? No. And in fact, most of them are performing very well. We're starting to cover the earnings. The reason why they sold off was for the simple reason there is uncertainty. Now, real money, I'm not real money, you're not real money, but real money doesn't hang around in uncertainty. It takes its money out and it puts it somewhere safe until all the nonsense dies away. I'll explain what that means. At the end of the decade, I would have taken my portfolio from $5,000 to $1 million, undoubtedly, 100%. When I get to $1 million, I can earn 100 grand a year just being in the S&P. I could earn about 40 grand a year just by holding it in Robinhood in uninvested cash. So when you get more money, you behave differently. You protect your money. Because when you have millions or billions, only 0.5% is life-changing. So that's why big money comes out of the market. That's why we saw all of this volatility. Now, for all of you, the retail investor, you get screwed because you start buying and what happens? You suddenly go down and you get frustrated and then you end up selling and then you end up buying on the way up and selling on the way down. Things get out of control very, very quickly. So once you've gone through all the pain and you've been in this for a long time and you've invested wisely and you've got money, you've then got to start protecting it. I say on the show repeatedly, it's easy to make money. It is. It really is. I'll say it again. It's easy to make money if you don't mind working harder than everyone else. And I will always work harder than everyone else. I'll go live 12 hours a day until I've achieved my goals and I never give up. So you must be prepared to work hard, go through the pain to get where you want to go to. Think of yourself like a farmer. When you start farming the field, you're spending, you're investing, you buy the field, you buy the seed, you work hard, you dig the ditches, you put the seeds in. No return. All the money is going out, all the work is going out and nothing is coming in. But you don't just give up, do you? You have to give it time. Now, when the first shoots start appearing, you don't pull them out of the ground and take a little bit straight away. You wait. You have patience. You allow your fields to grow, to one day provide you with an orchard. And what does an orchard provide you with? Annual fruit. Every year you pick the fruit from your trees. You are fully self-sustaining. You've put the work in. You've had the patience. And now you get the rewards. So a long-term investor is looking to buy and hold over the long term. Now, when the markets sell off and they are undervalued and all the conditions are right, CPI is down, PPI is down, GDP is good, macro conditions are external of the businesses. The S&P went from 27 times earnings to 19 times earnings to 18.7. For all those things in place, that's a go sign. That's a buy sign. For those that have conviction, those that don't have money in the market yet, those that are starting, that's your chance. The stock market is simply a transference of wealth. Those that have made it sell it off in risky times. Those that are brave enough and understand what the markets are doing buy with conviction. They go all in, like Warren Buffett. Warren Buffett recently sold a huge portion of his portfolio. He sold his S&P, VOO, and SPY, and everyone freaked out. In fact, what he actually did was sell 0.01 of his VOO, which was all of it, by the way, and 0.01 of SPY, which was all of it, but it was very little overall. But he still is mainly in stocks. Over 50% is in stocks, and the rest is in cash. Why did he do that? Like I said at the beginning of the video, he has so much money, he doesn't need to risk it. He knew the markets would be volatile. He sold a good chunk, and he's going to buy back when it's down. Maybe he already has. I don't know. Maybe he's still waiting. I don't know. We'll find out in time. But when the markets are showing you all the conditions, you buy with conviction. Now then, here's what this live stream is all about. How to protect your money and how to always win in a real life case, a real live action, me doing it for you live. With a slight caveat, I actually made the trade before I came on air. My 23rd or 24th trade, my 24th win. I'm going to show you it. I've already done it, and I'm going to explain to you why I did it. I'm going to use this analogy for you. So, we've already explained patience. You know your goal, because everything I'm about to tell you now has to fit all of these. Patience, know your goal. Don't get attached to your stock. It doesn't know you own it. Be prepared to sell it. Like Buffett, take some profit, but do it in the right way. Manage your risk. You got to manage your risk. It's more important than anything. When you get money, you want to keep it. You don't want everyone to lose it. Have the discipline to do what I'm about to do now and buy and sell with conviction. So, I recognized the stock market was oversold. I only want to buy the S&P 500 for integrity of this show, and quite honestly, it's all I need to achieve my goals, but mainly for what's right for this show, my audience, to demonstrate that buying the S&P is, for most people, all you actually need to do just at the right time and use conviction. I use margin, I amplify my gains. I also amplify my losses. All businesses use debt because they earn more money borrowing the money. The interest rate is less to borrow than it is what they make on that money. That's the same for me. I do the same thing. So, on the way down, I started to buy. All my cash is spent. I'm now using borrowed money. I'm using margin. Now, margin is costing me 4%, not the 5.25 it was. Some of it's 5.25, but the majority now is 4. Because I've refinanced, gone outside sources and found a way to get money to pay off margin and pay it through a different system at 4%. That's what I have done. So I'm paying 4%. So anything above 4% is a profit for me. Well, this year I'm going to make about 35%. Because 10% this year is what we expect, plus a 25% drop, about 35%. So clearly paying 4% to make 35 is the 31% gain, right? However, you have to manage the risk. You can't just keep spending and spending and spending and spending forever on margin, because one, eventually you'll run out of margin and you use all your cash, and that's fine. I've pretty much done that. But your margin risk will get higher and higher and higher, and your buffer between where you are and the margin maintenance line will get closer and closer and closer until you perhaps get forced to sell when you're down on a margin call. Nobody wants that. So you have to manage risk. Now, what I want to do is I want to perfectly time the bottom. I want to buy the bottom of all this drama. And that is what I've done. And this is how you can do it as well. The strategy I'm showing you now, you can do. So as it started to go down, I started to buy. Not because it was going down, because it was undervalued. Macro conditions were in place. The forward PE of the S&P was in place. CPI, PPI, GDP. Everything else was in place. Inflation coming down, rate cuts around the corner. All those things were in place to tell me, yes, it's time to buy. So I started to buy. And as it went down, I started to increase the amount I was buying. More and more and more on the way down as it was going down. Trying to find the bottom. And obviously, as I go down, I'm increasing from 1 share to 2 shares to 5 shares to 10 shares to 20 shares. And only a few days ago, I did 30 shares of the S&P in one day. I think I may have done 40 by the end of the day. So my biggest day was on the way down. Now then, as this goes on, I'm getting more and more shares, more than I need to get to $1 million. And I've gone below my margin buffer that I wanted to hold. I was holding 50%, which is great. It got down to 40 to 30, got to about 30%. Still way above the margin maintenance line, but that's where I am comfortable because we can get big drops and we can have drops of 20%. And I don't want to sell when I'm down. I don't need to sell when I'm down, and I don't want to get margin called. So what do? On the way down, I'm buying more and more and more. Then we started to rally. So what did I do? I used tax lots to sell some shares that I bought on the journey to the bottom without a profit or without a loss. Thereby, no loss, no profit, no tax, just swapping the ones at this price for the ones at this price. Because I know how many shares I want. I've got too many, and I've swapped the ones at here for the ones here. I'll use this as an example. If you want a pair of jeans and they are a half price, they're $100 pair of jeans, and they're on sale at 50% off. They're $50. You go in and buy them because you use them, you get value, you wear them, you get the service they provide. You get the end goal, the service. In my case, buying the S&P to get to $1 million. So you buy them. And then a week later, they're on sale for $25. You buy another pair, but you don't need 2 pairs of jeans. You only can wear one. They're only going to serve you 1 pair of jeans at a time. So what do you do with the $50 pair? Well, that $50 pair lost money, hasn't it? It's only worth $25 now. You take the $50 pair back to the shop and you get your $50 back while still keeping the pair you paid $25 for. Great. You've got the pair of jeans you wanted at the bottom. You bought the bottom, and the ones you bought at 50, you've taken back and got your money back. That is essentially what I've done. Now, by doing that, I've de-risked myself. I've put money back in my portfolio. I've reduced my margin. I've increased the line of my margin buffer, so I'm safer. I've got rid of the ones that cost me a little bit too much and swapped them for the ones that I bought at the bottom. I've been able to sell and not pay any tax because I've basically done it for a wash. I've not lost any money either. I've simply bought and sold, and I've got the shares I want at the lower price. So how does that actually work? This is my portfolio. I'm 100% in VOO. As you know, I am fully open and transparent with you. This is my real money. This is, as you can see, 99.92% in the S&P 500, is basically every single thing. The reason why it's not 100% is when you click on my Robinhood referral, I get a free share of Apple, so do you, and that's why it's 99.92, all right, as it was a second ago. Now then, my average, when all this started, was at $517. My average now on the S&P 500 is 494. Much better position. I've lowered my average. I've de-risked myself. I've got my cost basis down. I've made my positions more secure, more profitable long-term, and so on and so forth. This has been absolutely great for me, buying on the way down for all the reasons I've given at the beginning of the video. But I've got too many. I want to de-risk, because you can't own all the shares in the world, and I'm expecting another drop, and it might go down. What if it goes up? Doesn't matter. I've got enough. If it goes down, great. I've got more money now to buy more. What did I do? Well, this is what I did. I went into trade, sell. You might not see it on the screen yet. Click at the top, sell in tax lots. It's a button called Sell in Tax Lots. Click on Tax Lots. These are all my individual trades. Every time you buy, it's a lot. Okay? And now with Robinhood, you can sell individual lots. And you can see the ones I bought at the very bottom, they're all making loads of money. Lovely. Look at that. Aren't I clever? I bought the bottom of the market. Fantastic. I didn't know what the bottom was, but I was going to be in bigger than ever at the bottom. Can you see? $20, 20 shares, 10 shares, more and more shares, more frequently, higher volume was being bought as I was going down towards the bottom. Hurrah for me, I'm a genius, I bought the bottom of the market. No one can do that apparently. Well, I did. Now then, I've got too many shares now. So what do? I scroll down. These are all winning positions. Hooray, hooray. I'm making money everywhere. I'm a genius. Look at that. Oh, hang on a minute. At 502, I'm losing money. I'm only down $5 though, because we are now at 499. Now, I'm not going to do this again because I've already done it. But I did have shares today at 495. Just under where we are right now. And I sold them. I click the little box here. If I put my little tick in there, look, like that, see my little tick. And then I click done, and then I click sell. And I sell those lots. Now, what I did is, and I'll show you the trade I did, I actually sold a bunch of S&P 500 for a tiny, tiny profit. I sold like about, I don't know, I'll show you in a minute how many I sold. I sold a bunch, and I made about $5 profit. I sold for a wash. I got rid of the excess stock that I don't need. Now, it's gone up since then. Have I missed out? Yes, I've missed out. Is that bad? No, it's not bad. It's not bad at all. I've simply taken back one pair of jeans that I don't need. I've still got the ones at 25 bucks. I don't need any more. I've got what I need, and I've lowered my margin. I'm now paying less in interest. I've got a bigger buffer. And if it keeps going up, I've got enough shares to take me to way over $1 million now, as it turns out. But I've de-risked myself. At some point, I've got to pay my margin off, whether I sell some, whether I use my cash, which is what I'm going to do. But I don't want to pay tax on my gains. I want to borrow against my gains in the future and pay no tax again. When I retire, I will borrow against my income, and I will have tax-free income. So what I did, I sold a few. Now, if we go back here, if we keep scrolling down, these were all the ones on the way to the journey. Now, I could sell these as they all start getting on a wash. I don't want to. I can afford to own these, hold them. I've de-risked myself enough. I'm still very bullish on everything going up. I've de-risked myself enough for a big enough crash, and then I can buy more with the stocks I've just relieved myself from. I don't need to sell anymore. Otherwise, I'm taking out the power of going up. The more I sell for washes and stuff, the less I'm going to make in the future. So I don't want to do that. If I carry on scrolling, you'll see what I bought a year ago. Well, obviously what I bought a year ago is all up. There comes the green stuff. There you go. There's all the big gains. And you can see the gains get bigger and bigger and bigger and bigger. They're the ones I bought over a year ago. Look, you can see the gains get bigger. Look at that. 3,000 up. You can see. Okay, that's tax lots. Now, I'll show you the actual trade I did so you can actually see it. So this is my view. Scroll down, and this is on my brokerage account where I would have paid tax, not my Roth IRA. You can't do this on your IRA. This is being done on my brokerage account. Scroll down, and there you see it. The first sell I have done in 14 months on my brokerage. I've done 23 trades, 23 wins on my Roth IRA. This is my 24th trade and my 24th win. I sold 8 shares, $3,963. Let me go into that trade and show you what I did. April 23rd, just before I came on air. If I click on it, you will see that I sold 8 shares, 495.37 is what I told you. And there it is. Now, it doesn't show you... hang on. Does it? There you go. Oh, there it is. There is the tax lots. Yeah, you can go into the tax lots. So I made $7 on one lot, and I made $2 on the other. Now, I can earn so much a year on capital gains without paying any tax at all. I don't know what that number is. I've got to speak to my CPA, but I know I can earn so much a year, and I'm way below that. So I can sell for profit. If I scroll down here, you will see my realized profit and loss year to date is a staggering $10.43. That's what you want. I don't need to post a loss. I don't need to sell for losses and reduce my tax because I've sold nothing. I've made no profit. So I don't need to reduce my tax position. And I've got $10 profit, which is not going to get me any tax either because you're allowed to earn so much. And if it did cost me any money, it would cost me about $2. So either way, I win. But what I've managed to do is reduce my position. I've de-risked myself. Now, you may remember, if you were watching the show yesterday, I had $4,000 of buying power left. That's not my cash. That's my margin. $4,000 left to buy. Now, I've got $9,000 left to buy. So I've put more money back in. I've paid no tax. I've de-risked myself. I prepared for a return to a drop. Now, what I will do, very simple. I didn't used to focus on lowering my average. It wasn't important to me. It wasn't. But it is now. Not because I've changed or flip-flopped my opinions. I haven't. But I'm now entering a time where I have real money. For me. Not for somebody else. But real money for me, and my goal is now in sight. So now I only buy and use my money if we go below my average. I just sold slightly above my average. So I've got the cash. If we drop down tonight and there's a big sell-off or Trump says something, whatever, I will buy back as long as conditions haven't changed. Now, if we go into VOO, there is VOO for me. You now see my average cost has dropped from 517 to 494. Over time, your average has to go up. It has to go up because the value of the stocks go up. And if you're going to buy again, it'll go up. Well, I don't want to pay more. I'm a long-term investor. That's why I use margin now and went all in now when it was down. In a year, 2, 5, 10, 20, it's going to be up. The average price of the S&P doubles every 7 years. To give me my $1 million, to give me my peace of mind, to give me my risk management, I don't want to pay double in 7 years' time. I bought 7 years' time today. I use margin. I bought it when it was down. I de-risked myself. I now have enough money and enough shares all together across the Roth IRA and the brokerage account to take me to $1 million. The rest is now just my income on YouTube to pay that off and then build up some cash. That's it. Strategy done and finished. So now I only buy if I can lower my cost basis. That's it. That's it. So when the price of VOO, if and when it goes below 494, I'll buy one share. If it goes 490, I'll buy 5 shares. If it goes for 85, I'll buy 10 shares. If it goes for 50, I'll buy 100 shares. I will keep buying more when it goes to a point that lowers my average. That's never been a concern to me before because I was building my portfolio. Now I have a portfolio and I'm de-risking. I will happily buy under my average. So there we go. I believe this was the most important live stream I have ever done. I would like to leave you now. I'm going to answer all questions. If you'd like to join me on the extra channel now, I want your reaction and I'll answer all questions in the chat. But I do want to end this so it ends up as a video by itself. So I'd like to do that now, end this live stream and go over now to the extra channel. This will automatically take you to the extra channel. We're running a poll and only 50% of you, in fact 49% of you, have a risk strategy in place. That's terrible. 100% of you should have a risk strategy in place. Not 49%. That's terrible. Or 41 or whatever it was. 49, yes. 50% of you don't. That's terrible. Hopefully after this, you will. So there is my most important live stream this year. How to always win, how to time the bottom, how to protect your money, and I showed you live. Patience, wait to buy, wait to sell. Know your goal, what it is you want to achieve. Be prepared to sell. Do not hold on for anything. HODL. It was made up by crypto YouTubers to get you to buy and hold for dear life. No. Sell and make no profit at all. Reduce the risk when it's the right time. Be prepared to sell. Manage your risk. Discipline. And when it's time to buy, you buy like Buffett. You buy with conviction. There is my live stream. I hope you all enjoyed that. I sincerely hope you got to the end. I hope you tapped the like button. I hope you subscribed. Click above my head for all the links. Down below in the description, I'll put more information down here. I'm also going to send you now over to the extra channel where I will answer everyone's questions live in the chat. Join me. This live stream will take you directly there. But that's it from me. The most important video live stream I've ever made. Remember, it's easy to make money. The hard part is to keep it. And knowing that you're not married to the stock. The stock serves you. It's a business that you own. Treat it as such. Understand your risk management. Know your goal. And you too will get to $1 million. I'm doing it live on the show. There it is. Above my head, I'll answer your questions now live on YouTube, on the extra channel. Over here and over here, I'll put 2 more videos that you'll find useful. That's it from me. Thank you very much indeed. I'll see you now on extra and see you back for the closing bell. Take care of yourselves and each other.